Hello and welcome to the Global View on this Friday morning. You are watching Ausbiz. I'm Nadine Blaney. Let's get across what happened on Wall Street and rally on. It was all systems go overnight with the S&P 500 scoring a fourth straight daily gain. And it's just about 1% shy of its all-time high. The Nasdaq lifted as well. It is down less than 6% from the July record heights. The Dow rose and is now down less than 1.2% from its late August record highs. Gold stocks were big winners, with spot gold hitting record heights. Newmont, Barrick, and Goldfields were all significantly higher. Newmont up by 4%. On the S&P 500, the top movers were Warner Brothers and Kroger after it lifted its lower end of its annual sales forecast. Accent Enterprise was up by 6.3%. The biggest percentage losers, Moderna, that's actually a 4-year low on lower than expected FY25 revenue. And Charles Schwab and Micron Technology also fell in trade. Adobe shares were down in after-hours trading. So what you're seeing on the screen is through the session. Its fourth quarter revenue forecast missed estimates. It's now targeting fourth quarter total revenue of between $5.5 and $5.55 billion, which was below estimates. Helping to power the rally, Tesla, Microsoft, Apple, and Nvidia, all which ended higher. The ECB cut interest rates again as the economy there slows, signaling a declining path for rates as inflation also slows along with the economy. The ECB deposit rate sits at 3.5%. The president, Christine Lagarde, saying that the path is a declining path, but it's not predetermined. In the U.S., producer prices increased slightly more than expected in August on higher costs for services. But the overall trend is disinflationary. The PPI rose 0.2% last month, and weekly jobless claims increased just a bit last week, suggesting that layoffs remain low even as the labor market cools. This week's data really has reinforced expectations for a 25 basis point cut when the FOMC meets next week. The U.S. 10-year Treasury yields dipped lower on the data before pushing higher to trade at 3.68%. Let's get some analysis on those key themes. Peter Cardillo from Spartan Capital joins me now. Peter, hi. September traditionally a tough month for stocks. I know you were calling for around about a 5% drawdown. It's not really going like that, is it? What is the catalyst, do you think, that's driving these markets higher?
Well, I think, we did have a 2% decline prior to this rally for the S&P. And Nasdaq was down around 2.5, almost 3%. So I think what sparked this rally is the fact that a rate cut is now in play. Even though we expect now that the Fed is likely to be less dovish than we were looking for maybe 2 or 3 weeks ago. And that comes on the back of the inflation data. Now, we saw that with the CPI, we saw that with the PPI today, where basically, if you look at the yearly trend, inflation is moving in the right direction. Of course, we saw both with the CPI and the PPI, the core rate actually go up a bit, and that was, I think, that is one of the reasons why we now think that a 25 basis point cut is a done deal.
Okay, so if a rate cut is a done deal, does gold just keep tracking higher from here, given, we've also got central bank buying, we've got real uses for gold in the economy as well?
Yeah, well, the fundamentals and the technicals are strengthening on a daily basis. In fact, today, we saw gold make a new record high. We're not that far away from 2,600, and I suspect that it's just a matter of time before we breach to the upside that level, and that probably, will signal the next leg upward that I think, gold could probably reach 3,000 or close to 3,000 by year end. So, why? as you mentioned, fundamentals are good. If you look at the industrial usage of gold, jewelry sales are strong throughout Asia and in certain parts of Europe. And if you look at the fact that central banks continue to buy, that's obviously a big plus. And the geopolitical and political concerns are a major reason to be holding gold at this time. And so I remain bullish, and I repeat, I think there's a good possibility that by year end we could see gold get close to 3,000.
Well, we will be watching that one with much interest here, and obviously gold miners will be in focus in Australia after a really stellar performance through the overnight on Wall Street. What happens to the US dollar? So a rate cut is a foregone conclusion. Where to from here for the dollar?
You know, in the short term, I'm bearish on the dollar. And the only reason why I'm bearish here is because I still fear the fact that we're probably headed for another round of unwinding of the carry trade. And that obviously would put a lot of pressure on the dollar. Now, from a fundamental viewpoint, there's really no reason to be bearish because the economy is still growing and inflation is headed in the right direction. And the fact that we're not going to get an overly aggressive Fed, at least not this time around. So those factors are basically positive in the short term. But again, my longer view is that we're probably subject to another unwinding of the carry trade, and that should put the dollar index slightly, slightly under parity.
Okay. We will be watching that as well with much interest. So generally speaking, Peter, when you're thinking about equities, how are you allocating? Where are you allocating? What are the qualities now that are important to you before you would put any money into a particular stock?
Well, I think, it's you have to be selective. With the averages nearing back to their records, a lot of stocks are trading at, I would say, overvalued valuations at this time. So you'd have to be very selective. And I kind of think that the smaller cap group is likely to outperform when the market gets back on when the market continues to rally, in a sense that probably in late October, we'll probably be headed for another leg upward. And so I think the small cap arena is a good place to be.
Small caps, got it. Oh, Peter, thank you for joining us today. Really appreciate you coming in.
Thank you.
From Spartan Capital, and he was live in New York. So that is a view on the market, and today here locally we are watching out for a lift by about 45 points or close to 0.6%. Gold will be in focus after that record high overnight. The commodities complex in general, though, we have seen a bit of a rebound in the price of oil. Obviously the trajectory is not crash hot for oil, but we did have that Hurricane Francine bearing down on Louisiana. And it will be interesting to see what the banks do today as well after what's been a touch and go week. So stay with us on this Friday morning. We'll get you through the open of the session next.